How does trading influence your real life?
Coming to trading in particular, you need a clarity. If you have set some target and your stop loss, you need to achieve that. You don't have to think of other disturbances. So once you're clear, you have that clarity in your life and as well as in trading. So you're good to go, and obviously you'll be successful. You'll hit the stop loss or you'll hit the target.
Saving capital is the
Yeah,
first
yes.
priority.
Coming to capital, unless and until you have the capital, then you can play into markets.
Yeah.
Once your capital is gone, the game is over. Your
Yeah.
wicket is gone. So stock market is like test cricket. The more you wait and watch, the more it will reward you. Like just like test.
Welcome to Risk and Reward Corners, the ultimate podcast for traders, investors, and financial enthusiasts, brought to you by City Index. Today we have with us Mr. Chaitanya Kosandal, who is software developer as well as a passionate trader. Hi Chaitanya.
Hi Shweta. Yeah, I'm glad to be here.
Can we have a brief intro about your journey or like how you started trading and when did you start?
Yeah, sure, Shweta. So I'm a certified CRM developer.
Okay.
That was my professional life. I
Mhm.
started into equity markets back in 2018. Like I had my aunt who used to like normally watch CNBC hours like or that Z Business
Mhm.
every morning at 9. So that is how I like came into market. I got to know more into markets.
Yeah.
So that was my triggering point actually.
Yeah.
And but like I bought my first equity share when I was in high school. That
Okay.
is when I had got some
So
scholarship
you had
money.
your own demat
No,
account
I didn't
during high
had
school?
no, I didn't had my demat account. I invested into my mom's demat account
Oh,
actually.
okay.
So my first demat account I had it in 2018,
Okay.
which is after PU and my engineering first year. So I've done my engineering in from Belgaum. So during my engineering days, I started into markets, seeing all the news, and that is how I was investing and putting money.
Yeah.
Initially, I used to do short term. Then
Mhm.
later, I realized how long term works and how the compounding works in long term. So that is about me.
Okay. What's your trigger? Like you said, your aunt used to watch CNBC and you
Yeah.
just started. So did you notice something which triggered you that, okay, I have to do trading?
Yes. So one thing that triggered in me is like, yeah, I obviously knew FD returns and how much I had my normal savings account, student savings. So it would give me like almost 0.51%, 0.5 per month it used to give. So then like I saw my aunt investing and I did see the returns what short term and long term it had capable. She told me like, see, this is how Reliance works, how it doubled. Then that is how I generated interest, and I did see a single day it could give me 10-20% returns. So that was my triggering point, and I thought, yeah, this has a lot of potential and this is better
Yeah.
than bank FD. Yeah, so that was my
That's a
trigger.
good reason to start.
Yes.
So, how does trading influence your real life or discipline in your life and
Yes.
beyond the charts?
Yeah. So coming to trading in particular, you need a clarity.
Mhm.
If you have set some target and your stop loss, you need to achieve that. You don't have to think of other disturbances. So once you're clear, you have that clarity in your life and as well as in trading. So you're good to go, and obviously you'll be successful. You'll hit the stop loss or you'll hit the target.
So, I asked you beyond the charts, like
Yeah.
when you're trading, you have stop loss, you are watching the charts, right?
Yes.
So, accordingly, you're having it done. But how did trading influence your life? Did you had anything in your life where because of trading, you are following some kind of discipline or anything in
Yeah.
your life
So
apart from
yeah,
the charts and
apart from
trading?
charts coming to life, I had a few goals in my life,
Hmm.
financial goals,
Yeah.
and also I was pretty clear in what I'm going to pursue.
Yeah.
Engineering, we have many streams, so I was pretty clear I want to do something in computer, something in coding.
Yeah.
So I held to that, and then I went forward in my career. So that is how it triggered. And like obviously, if I would have not, I would have got some less marks. I would have not cleared engineering at the first place, but I did clear, and then I checked all the boxes, and then it helped me to move
Yeah,
forward.
normally during that age you'll be having some kind of funny and everything, that kind of
Yeah,
nature where you want to enjoy life moreover. So maybe this influenced your life
yeah,
with,
yeah,
like, in
yes,
a broader way,
yes.
we
So
can say.
yeah, so having that financial goal when I started market, I know what I have to achieve and how it is possible. So yeah, So any young guy who is into colleges or something, I would recommend first focus on developing skill.
Yeah.
That is important. You should have primary skills, then start investing into markets. See, to earn money from the markets, you like for example, you want to make your 1 rupee, you convert it into 10.
Yeah.
So to earn that 1 rupee, you need to have some kind of skills, or some you need to do some business or a
Yeah.
job. So that
That's right.
is very important. So nowadays, I think people are not focusing on that straight away. They are entering into markets with parents' money or borrowing loans. That is not the thing. Market is
That's not
a
the way to
yeah,
do it.
yes. Market is a place where you can invest and then you can grow your money. But to invest, you need to do some kind of job. You need to like build your skill.
Yeah.
Skill is very important.
So that skin in the game is really important. So once you get your parents money or the lended money, so it's not, you won't be very serious and you won't
Yeah,
value it as much as you value your own money, like hard earned money.
yeah.
So
Yeah,
I
actually,
guess
yes. Coming
that's
to
how it is.
coming to the emotional point, actually, you shouldn't have that emotions when you're trading.
Mm-hmm.
Actually, some guys do it pretty well, but if you're emotionally attached with your money, you won't sometimes book profit. No, I will not take this loss. No, no, this has gone up. So you'll start thinking emotionally if it is your own money. That emotion you need to take out whenever you are trading.
Okay.
I think you shouldn't be emotional with
You
your
just
money.
need to be
Yeah,
calculative
yeah,
or
yes,
logical.
yes, logical.
So you said that you started during engineering college,
Yes,
but there is a one important question which most of the audience would want to know. Like even I experience when the parents of some kids who are very interested in trading and want to start trading classes so that they will know know about trading and they'll start early. But then they has one concern that okay, if they start early and they start earning a lot of money and like maybe they trade well or
hmm,
they earn some money, so they will stop studying,
yes.
they'll leave everything, their educational academic life, and they'll just start trading. So is that possible? And what do you think? You were a student when you started,
Yes.
and how does it appear for you?
Yeah. If they are doing well, yeah, obviously they should continue. But stopping your education in the middle, that's not a complete. Yeah. Alongside, I have also done it simultaneously. You
Hmm.
can complete it. There is no. See, market is just 9 to 3 and Monday to Friday.
Yeah.
It's if you're doing options or something, then you need to be at the screen. But for equity, I don't think you have to just stick to the screen from 9 to 3. You can just have a glance every hour or something, or 15 minutes, or start or end of the day. You can just have a small look and you can go about and read the news. You can just see your charts. It's not like full time you have to just sit
You have to just quit
9 to 3.
studying and only
Yeah,
do
yeah,
trading. That's
yes.
not
Yeah, that's not.
really
So
that.
yeah, many people have their businesses, they do jobs, and simultaneously they do. You
Yeah.
know, Mukesh Ambani, even he invests, but he doesn't just shut his business and he'll just Tata's. There are many examples. Radhakrishna Daman, he has his primary skill is
I guess
business.
they have that kind of mindset. But
Yes,
for common people, every human being, like every mother or father, parents, they are very concerned about their children. Like
yes,
they are very lean towards trading now. They are watching everybody trade and they want to trade. So, what was your mindset during those time? Like you're speaking this now that okay,
yes.
we have to do this. But what was your mindset and how did you know that you should not quit studying?
Yeah. So my mindset was obviously same. I was also planning to just move to anytime it's better, right? You
Just
just
acquire some skills
yeah,
so that later you can
yeah,
trade.
yeah. So my primary mindset was my parents didn't give me money that easy. So it was all my scholarship money.
Mhm.
So then that it triggered, no, I have to do some job, I have to build some skills, then I can utilize. But what happens now, like they give their like whatever students, they get some money from their parents nowadays, easily they get a few lakhs. So what they think, yeah, parents are giving me, so I'll just continue here and this is how I'll grow. But that was not in my case. My parents didn't give me that money that easily.
Yeah.
So that is how it triggered me to build a skill and start a job where I'll earn some income, then I'll come here and I'll invest.
That's really great. That
Yeah.
I hope most of the audience got some of
Yes,
their answers. Like the parents who are watching, they'll definitely get something from you. And the kids who want to start early, they will definitely take
yes.
it from you. The advice you gave, like you should not quit studying and just continue both of them at together. Like
Yes,
the studying is the active one and trading is the passive one,
yes, yes.
right?
Yeah. So investing cannot be a primary source of income
Yeah,
until and unless a certain age you hit or you're retired or something.
yeah,
Uh, Investing has to always be your secondary source of income, or just like mode to convert your hard-earned money into a bigger. That is how you can beat
Well said.
inflation.
Totally well
Yeah.
said. So, can you speak about what are some underrated tools which are used for risk management
Yeah. So coming to some
that
underrated,
you use?
yeah. So coming to underrated tools, everyone knows, I guess, trading view just for charts. But
Mhm.
I feel balance sheet is something very old school, but still effective. I know it can be
So, it
manipulated.
comes under fundamental, right?
Yes, yes, fundamental. So one of the tool is screener that I use to see what is happening at the back end, fundamental on ground business, what is happening,
Yeah.
what is PE of that particular company organization, and like how their profits are increasing, and what's happening with the promoter
So, what's the
holdings.
cash flow and
Yeah,
all?
cash flow,
But
everything.
then the screener and all, these are all fundamental things. Like there's some underrated tools in the technical front,
Technical front, see, coming to tools,
unexplored,
yeah,
but you use.
yeah, I normally trading view, there is no tool. There is no tool that will say, oh, it is gonna dip, it is gonna buy. Those tools don't come at a free cost.
Mhm.
There are available in the market, but I guess the only some few set of
The
people
big
said,
bulls
yeah,
use it.
big bulls use it. But we cannot, as a retailers, no one has the access to those tools,
Okay.
and we shouldn't rely on any of the tools. See, the market is dynamic.
Hmm.
These tools are static, so obviously
Hmm.
they
Hmm.
cannot give
Okay.
you.
Okay.
So yeah, I use only two tools: moving average.
Okay.
That's all I use.
That's a brilliant one. Even our trading team says the same
Yes,
normally.
moving average is the best one
Mhm.
to just see what happened to the price in past 200 days, 20 days,
Yeah.
and it is above or below. That is more than enough. Moving average should be more than enough. Also, if you want to see the levels, if you're a beginner, you can use the Fibonacci chart. That is a static. That is also a good one. But other than that, oversold, overbought, that won't tell you the clear picture.
So,
Actually, chart is the only tool. Seeing the chart, you can just say, oh, it is going to go up, it is going to come down, it is an accumulation phase, or it will come to a distribution phase.
so with the different time frames.
Yeah,
That's
with
it.
the different time frames, I usually just see month, week, and day.
So you
That's all.
normally trade into futures options,
No, I trade into normal cash equity. I do trade short term and long term, but not
only equity,
only
not
equity.
futures and
No, no
options.
option.
Do you have to say something about futures and options? Why do you did not trade into futures and options?
Yes, I did try my hand in future and options, but I feel the amount of data that we have and what data others see is totally opposite. Whatever we do, totally opposite, and it is pretty fast, live market, and we do not have that many funds to lose. So if you are entering into future and markets, your risk should be 100%. You should be
So
okay.
that many funds to lose in the sense, like what is the ticket size? You can say
Yeah,
that many funds. You
ticket
mean
size, it is changing pretty frequently for Nifty, Bank
yeah, an
Nifty.
average one?
On average, it is 25, 10,000. Now, I guess it is increased to 50, 60,000. But when you're investing into future, you should be ready to lose every 100%, and you should be okay. I guess most of them are not. Even I'm not losing, okay with losing entire of my funds,
Okay,
because that is again hard earned.
saving capital is
Yeah,
the
yeah,
first
yes.
priority.
So yeah, so see, coming to capital, unless and until you have the capital, then you can play into markets.
Yeah,
Once your capital is gone, the game is over. Your
yeah.
wicket is gone. So stock market is like test cricket. The more you wait and watch, the more it will reward you, like
Okay.
just like test.
How about options? Like same thing
Yeah,
because of
option.
the
Yeah, because of the risk involved in options, futures, I don't trade, and I don't feel necessary, because I think same kind of returns we can get in equity, but with patience. So yeah, it is a get rich quick scheme. Most of the people get into that, and even CB says 90% of the traders lose. So are those 10%? Obviously, they are not one of the retail. I have
yeah.
never seen any retailer earning big in future and options. But yeah, I see a lot of Instagram or YouTube who promote future and options, but I don't think in reality
It
you
makes
can
sense.
do.
Hmm.
Yeah, I've seen many people like around me doing well in equity,
Okay.
from rags to riches. I've seen many people. I've seen some of my dad's friends who had MRF at 1,000, and they were doing some job. Now they are big industrialists. I would not like to take names. That invested in MRF at some 900. Now MRF hit just 1,41. It is trading at 1 lakh. So I've seen that, but I've never seen someone make big money with future and options.
Okay. What's one financial condition you live by, no matter what the market condition is?
No matter what the condition is, market हो या आदमी, जाना तो ऊपर ही है. So I'm not worried of those small dips or any big crashes.
Okay.
I know what's going to happen in market. It has to go up by the end of the day, because all the businesses, all the economy runs here. Everyone invests here, not just the government. All the
जाना तो
industry,
ऊपर
oh,
ही है.
jana to upar hi hai at the end of the day. So yeah, that's the one fund I see, and like I have a positive outlook towards the market, especially towards Indian markets, and the way we are growing for the next maybe a decade, or we will obviously become Vishwaguru, and with that being third world's third economic power, obviously our
Oh,
markets
wow.
have to grow.
Achha.
So yeah, so that is pretty clear for next decade.
So how do you differentiate between calculated risk and reckless trading?
Okay, calculated risk is something you define your risk. Meaning you have invested 100 and you have kept your stop loss at 80. Okay,
Okay.
I'm ready to lose 80 rupees. Okay, it means like 20 rupees.
Your
Stop
risk appetite.
risk appetite. Reckless is something like you don't know what's the target, what's the stop loss.
You
See,
just want to trade.
you just
You're
want to
just
trade, you just put money and you
Mhm.
don't know, oh, okay, I'll just come out at this price, I'll come out at that price. Just like randomly, and if it goes below, suddenly if it comes down to like you have lost 80 rupees, the price has come dipped to 20 rupees, and then you think, no, I should get out, but you can't get out, like it has already gone. So you need to define your risk. Your अगर आपको मालूम है नहीं जाना किधर है, तो आप जाओगे किधर, कौन से भी बस में बैठोगे, किधर जाएगा पता नहीं, तो obviously you'll end up
yeah.
losing, or you'll just reach at a wrong place. So you should know where you want to reach, what is your target, what is your stop loss. Very important nowadays in such markets.
Okay.
And you need to be pretty clear, you want to do short term or long term, and as per that you need to set your targets.
Okay. Can you let us know about how is the short term and long term works for you?
Yeah, short term and long term, we can define it by seeing charts.
Okay.
Suppose if I see a chart in a daily time frame and I see a 10-20% upside, so obviously it is a short term trade. But if I on monthly time frame, if I see some, or weekly time, if I find some equity which shows me, oh, it has a potential of 50%, 100%, or maybe more, it can be multi-bagger, that is when I enter it for a long term. Suppose now the markets are down. Today it has crashed by 7%. So right time to enter for long term. Many of the stocks have crashed by 50, 60, 70%. And like, yeah. Now suppose if you're, now you know the gold price is somewhere around 90,000.
Yeah.
And suppose if I'm offering you at 60,000, I'm offering you
60,000. Yeah, I would like to buy.
yeah.
Okay. Of
So
course.
this is how the market condition is. There are many stocks like gold which are down by 40, 50%. So I guess, yeah, this is how it works. And right time now, this is the time where people get into markets for long term. When the market is already up, it is the bull run is running. That is where you enter it for short time. Short time meaning 1 or 2 years. It may give you multi-bagger returns.
So short time as in 1 or 2 years. You
Yes,
mean?
yes.
Okay, as per traders, I used to think short term as in 15 days, 20, or a month or two.
That is
that way.
possible in bull market, yes, obviously one day also, but usually
If
short
there is a
term,
crash, then
yeah,
it
yeah,
takes longer
yeah.
to recover.
Usually short term meaning is 3 months, 6 months, or year or two. Short, that was short term, the real
Okay.
meaning. But nowadays we are moving so fast. Short term meaning has changed to 15 days, maybe a week or a day as well. Intraday, what we call. But usually short term, if you hold it, if we in bull markets 1 year, 2 year, it may give you 3x, 4x, which maybe a day or 15 day cannot give.
Now about long term.
Long term,
So which is the longest holding stock you have right?
longest holding stock, I have Reliance. That was I guess everyone has Reliance. That was my first stock in 2018. I had bought.
Bought it.
I
Yeah.
have still, obviously, Reliance is the market mover, and for Nifty to grow, Reliance has to go. It is the top Nifty 50 stock. So for the markets to move, all the Nifty 50 stocks will go up. So that is like an FD, I would say.
Yeah.
Reliance, it has to go up. Just for collateral, I do have some small caps, mid. So Reliance, sometimes during this market, if you see market has crashed by 7%, but if Reliance is just down by 2-3%. So such stocks like stabilize your portfolio. You should have some safe FD kind of stocks in your portfolio.
In your view, is trading for everyone or for select mindset, and why?
Yeah, so everyone can trade, obviously, but your mindset, again, I said, you should define your risk.
Okay.
Like just you come and someone is trading, you just come, oh, I'll also put. No, but you should have that mindset. You should be ready to lose money, I would say, in market. if you're not ready to lose money, you won't earn money. So that
Yeah.
is the mantra. You should be ready to lose money. Then see, you're investing in a business comes with a risk. So you need to understand in what kind of business you're investing and how much risk it has. Suppose you're investing in a big company like Reliance or Tata. Obviously it comes with a lower risk because those people have experience of all market conditions, and they have given profit over the years. So that is where the risk is pretty low. And coming to some small cap or a startup company nowadays, Zomato, you see,
Yeah.
Ola. So it comes with a lot of risk because like the management is pretty new, and yeah, they've just started a company, so you cannot just rely on them. Yeah, they can
Because
give you.
people bet on the data they have, I guess.
Yes, they bet on the data.
Some e-commerce are in negative, but because of their data, they have a stronger game.
Coming to e-commerce, they are not making profit.
Yeah.
Ultimately, in for an investor to get returns, the company should make profit, right?
Yeah,
Even if
of
they have
course.
data or they have that market
Like they're having the
capitalization.
valuation
Yes,
game.
yeah, they have the value. That doesn't work in markets actually.
Mhm.
When they raise around, that would work. But as an investor, you don't see the value. If it is a good company, maybe it is small cap, mid or large. If the profits are good, they are growing, then you invest, right? If it is profitable, if it is not profitable, you won't touch that. Coming to maybe Paytm, you have seen Swiggy.
Yeah.
Swiggy is a loss making company. Now Zomato has become a profit making, so that is why it has entered Nifty 50.
Okay.
So Ola, Ola again, it is a loss making company. That is where I guess investors should avoid such companies. We have a lot, like there are almost 2,000 companies listed, and like maybe more than
The
500,000, they are like pretty good
Mhm.
companies. So
Yeah.
you have option to choose between Reliance and like such companies. Obviously you should go with the
There are
best.
4,000 plus companies, and it cannot be done in a proper way. So you have to choose your own.
Yeah,
Yeah.
yes. So you need to see which businesses have monopoly, which businesses have consistently given returns or are giving from past few quarters. And yeah, also the most important thing is sector.
Yeah.
You need to see what is trending now. EV is a game changer. Maybe green energy is, it is required. We have to move towards green energy. Coming to water recycling,
Hydrogen
waste
one also
management.
is there.
Yes. So water management.
Mhm.
So water, we nowadays we are facing a lot of. So these companies will come
Water
into
crisis are
picture.
there. Yeah.
Yes, automobile industry is going into a big transformation from normal to EV. We are coming. Infra is growing at a good
So
rate
the
in
one
India.
which is not upgrading from normal to EV,
Yeah,
they are not like IPO of Hyundai, I
yeah,
guess.
yes.
It, it,
Yeah,
it is the same
so
one.
yes, so coming to EV, Tata Motors is the market leader and Mahindra. Then we have this Tesla, which is obviously outside. So Hyundai has not adopted. So see,
Hmm.
Canon was such a big
Yes, yes,
company,
yes.
and it didn't adopt to the new technology, so it had to shut. So we need to see these companies who are adopting to new technology pretty quick. Tata Motors was the first one, so you see in EV it is number one. Even Hyundai, now
The
Mahindra is
same with
coming.
Nokia. It did not shift
Yeah,
to
Nokia, correct.
Android and it stick to
Yes,
Windows
yeah.
and all that.
So that is why you need to check your investments. What's happening with the company? Are they moving in the right direction? If it is not, you can just quit there and just invest in some company which is the market leader.
What do most people get wrong about financial independence?
So financial independence, yeah.
So when you started trading and you had your classmates, anybody, and you discuss it with somebody, right? Your friends or somebody, and what do their mindset? Like they used to say something about, comment about your this thing, or you could have some review on that.
Yeah.
And how do you know that they have taken in certain way that this is the financial independence? So I should also trade as my friend is trading and he's has his financial independence.
So what mindset my friends had when I talked about stock market, that was like get rich or get get poor in one night. So that is their mindset. So I had to tell them no. So this is not how it works. So there are different modules here in market, and where you need to invest. So they had this mindset again of options and futures, which
Okay.
I didn't have at that time. So I was into equity. So I just told, see, this is how equity works. You're
So
investing
you're
in.
pretty clear about
Yes,
these things.
yes. So I told them you're investing in some business, not into randomly just, it is not just a script name you're putting money.
It's not just a earning tool.
Yeah, yes.
It's not a money machine.
Not a money machine. You just put money and you just take out. It takes time, right? The business has to grow, then your money will grow. It's not just you put your foot, okay, from today the company
So
will
instead
start.
of starting your own business, you are just investing into
Yeah,
somebody's
some,
business who are
yes,
doing well.
correct. So if I tell you next 30-40 years of yours, can you build a company like Reliance?
No, not possible.
The best thing what you
He like Reliance is a very big shop, so we cannot do the same way he has built, and
yeah,
it takes a lot.
so the best thing you can just partner with them, right?
Yeah,
Reliance, to build Reliance, it has taken them 3-4 generations. It is not possible for you and me to just go and build a company like Reliance.
yeah,
So the best thing we can do, you can partner
can
with them.
invest. Yeah,
Yeah, you can invest. So that was one of my mindsets back in college. So that is
and
what I.
that's really amazing. So
So not just college. Surprisingly, even my colleagues at workplace, they also have that same mindset. Oh, market is risky. Will not put my money at this point. So they're also like, I told them, see, this is the power of SIP. This is how compounding was. This is only thing you can get in markets. So cricket.
yeah,
Market is like hitting sixes and fours. But if you want very stability, banks you have like just playing ones and twos. Banks are good for like, just for singles and doubles. At some point when when you're retired, you want, no, I want my funds to be totally safe, then you can choose. But in your early 20s, you can,
totally
yeah,
safe, but then it cannot beat the inflation.
it cannot beat. But yeah, you have left you have lived your life just few years. I'm talking about retirement in your 70s, 60s.
Mhm.
You have few 10-20 years left.
So our parents, their generation, everybody used to do FDs
Yes.
normally. So
So what one mistake they did, they started FD right from their 20s. Now we can take a lot of risk, right? Our parents cannot. So
yeah,
we have that freedom. So we can start into the markets pretty early, and then we can, going forward, we can reduce our risk, reduce that is how. SIP, I guess nowadays everyone is doing SIP. Nowadays people are educated, but still surprisingly most of them are not.
yeah,
Dream 11 accounts, how many you have and how many demat accounts you have in India. So there is
no,
a lot of scope for India to grow. Actually, we have just 10% of our population is investing, and active are pretty less.
yeah,
And now just because market has crashed, everyone is going out. I would say this is the time to enter. This is the right time to enter, and yeah, if you enter now, then you can see what market can do and how compounding will
in
work
the
in
upcoming years,
upcoming years. Yes.
of course. What are your thoughts on manipulation,
So coming
market
to
manipulation?
manipulation, how Indian markets are manipulated frequently.
Hmm.
So before it used to happen, like we used to not know. The speed of data was pretty slow, but now the speed of data is very fast. So have you heard about Mazgaon Dock, the famous
No.
defense? So this is a very famous defense company.
Hmm.
So few days back, ICCI Securities, if you know, it was a big brokerage firm,
Okay.
had just circulated a news saying it was trading at somewhere at 5,000. It stated no, it will crash down to 900, and the price started falling initially. 2-3 days it crashed by 20-30%, but now like again it came back to that 5,000 range.
Hmm.
So what these guys do, they circulate news saying no, it will crash, and all we retailers, we start selling, and
Okay.
they start accumulating, and once they accumulate, they pass on the news, no, no, this will hit a new high and all, and that is how it goes up. So have how the market works, like as a sea. Just imagine it to be a sea, and
Okay.
you have this sharks are all our mutual funds, big brokerage.
Okay.
So for us to survive in this, that there's a small fish always below shark's chin.
Yeah.
So I would recommend everyone to become that chin. So let them go find food. You just sit down there and eat. Just follow those big guys. They say sell, you buy. When they say you buy, you sell. So they say, now you see that report has come up, and it has told 900. So imagine everyone is selling. Who is buying? It
Okay.
should hit lower circuit, right?
Yeah. Yeah.
The price should
If
just,
everybody keeps selling, it should
yes,
hit the
it should
lower
come
circuit.
down. Then
Yeah.
who is buying? Everyone knows the ICICI is a big firm. Everyone. So
Hmm.
if I say ICICI has told it will come down to 800 from 5,000, obviously you'll believe. Any retailer will
Yeah.
believe it is going to come down. But you see, someone is buying. He's not a fool to buy. It is going to come down, and he's buying at a price at somewhere around 4,000, 5,000. So it is for a
This
reason he's
kind of
buying it.
thing happened
The,
in 2024 election, I guess.
yes, this kind of thing happened in elections. This is just one example I've given. There are
Hmm.
many such talks. Now if you see, there is a recent news on gold. it is saying it will crash by 40%.
Okay.
So yeah, again, which country is trying to buy gold and it is trying to accumulate gold.
Okay.
So again, they want to lower the demand and then buy, and again they want.
That's the reason there are a lot
Yes.
of news on social media, so
Yes.
that retailers get influenced by it.
See, no one will give any tip for free. Why will
Yeah.
ICICI will give it for you, like at free of cost? They have so many analysts. They put in so much money in analysis, finding what is happening
Yeah.
inside, on ground reality, what is happening.
Yeah.
Why will they give at a free cost?
Yeah.
Nothing is for free. Even the trading view is free. That is just again to fool us. So people like see the technical as like perfect geometry. Suppose this is a support line, price should come and it should go up. That is not like geometry what we had. Oh, this line, this is the boundary.
Support and the
Yeah.
resistance.
So it might come down a bit, more, maybe more than 10-15%. And have you
So that
seen
might be because of some
that
news
that
or
is because
something.
of manipulation. They try to scare you. They'll hit everyone's stop loss. When it hits stop loss, you have more shares into the market. Everyone sells so that sharks can buy. It will go down, it will hit everyone's stop loss, and many a times it will go up from there and it will hit the resistance. So that is how manipulation works. You shouldn't see technical to be as such perfect geometry. It will just give an idea. So this is the support, this is a resistance. Support meaning, suppose a price.
It is one of the way to just
Yes.
monitor the charts.
Yes. Support meaning, let's say a stock from 100 it fell to 50. So, and there it stopped and buyers came in and it started accumulating. Meaning at 50 there were buyers and the price went up. So next time when the price comes back to 50, there were previous buying orders which were not fulfilled. Obviously, it went up. So there were more buyers. That is why the price went up. So again, when it comes back to that price, if the sellers are more, if it fulfills all the order, it will go down.
Okay.
But at that point, if previous buying orders and current buying orders are more, then the price will go up. So that is how support works. Many people,
it's all about buying and
yes,
selling.
many people mistake it as just a line. It is not a line, it is a range where people buy. And also, back of the mind, if someone sees the chart, oh, last time it took support, I should buy. Plus, adding all those conditions, then the price goes up. And coming to charts, what people see, there are many patterns,
Yeah.
One of the famous pattern is cup and handle, if you see. So they treat it as, oh, it should form a proper cup, proper handle.
Okay.
That is not how it is. Suppose like,
so it can work somewhere nearby that
nearby
shape as well.
So rather than focusing on the pattern, understand how the price is moving. Price action, it is very important. Suppose if stock has hit a new high of 1000, but it came back down to 500 due to crash or due to any but
Some
at,
XYZ reason.
yes, but at 500 it stopped, it didn't go down. Why? Because buyers entered, and suppose for next 2-3 years 500 to 600 it was stuck in that range, 5 to 600 maybe for 6 months or a year, and then again price shot up to 1000. It went and it hit a new high, it formed a U shape.
Okay.
Then from there it came from 1000, it came back to some, let's say 900, 800, but it didn't go below. Meaning what? Buyers are interested at that price. So obviously a retailer won't be interested at that price. Some big person is. So accumulation is happening between 800 to 900. It will form a base there. Again it will go up because obviously buyers are interested, and when it goes high it will break the previous and it will make a new high. That is how the cup and handle logic is. Because it made a new high, it didn't come down that much. It came down by just 10%, maybe 10, 20, and from there it picked up. Meaning buyers are still interested. So that is how you need to look at chart patterns, I would say.
So one last thing, if there are beginners or anybody who is afraid to get into market due to the risk involved, what would you like to say them first?
So there's a very famous dialogue from Harshad Mehta, risk hai to ishq hai.
Oh,
So
okay.
you need to take that risk to enter the market. Even in life, you have risk. Anything,
is everywhere.
Risk is everywhere. So you need to understand that. So yeah, if you understand, you make your risk thinking pretty clear, you'll enter into the markets pretty. That's all.
Thank you very much for being here, and that was wonderful session, and you gave great insights.
Yeah, thank you.
I hope the audience will benefit from all of these.
Yeah, sure.
Thank you so much.